Hey everyone, welcome back to this channel. And today I have a really exciting video for you. We are going to be talking about US30, giving you a full strategy on trading this particular index, mainly because it can be a little bit challenging and a little confusing and intimidating for a lot of new traders. But I'm going to show you a super easy strategy that I use as a part of my trading playbook. And it's going to be something that could possibly work for you depending on a whole bunch of factors. But we are going to go through all of these different things, talking about market analysis, both news and technical, times to trade, your entry signal, time frame in which you should enter the market. And also, we're going to be looking at different methods such as scalping, day trading, and swing trading in terms of what you should use and when. Of course, we'll be talking about stop losses, and then we will be talking about TP or take profit or when you should exit the market. So let's go ahead and get into it. So the first thing you're going to be doing is analyzing the news. So this is also known as fundamental analysis, and this is extremely important, mainly because when I first started trading, I didn't know anything about this. I ended up losing a ton of money because I did not understand the fundamental side of markets. And I knew a little bit from being an investor, but it is even more crucial when it comes to trading. So let's go ahead and go to my favorite site called Forex Factory. And you can see that this is the news for the US for this particular week. So if we look at this, I like to filter mine. So there's a little filter over here. There's all these different events, and I only look at US mainly because in this situation, we are looking at US30. So we want to be looking at US-based news, and we can see all the different events that will be happening this week. So nothing Sunday, Monday, which is cool. Nothing really on Tuesday, although it's got these things here. So the things that I mostly focus on inside of the market are going to be these things with these red, it looks like folders or factories or whatever. So a really big thing is going to be core CPI. M over M or M/M is month over month. So CPI is an economic indicator. Basically, it's called a consumer price index. So what it is basically in the month over month scenario is how much did, let's just say, eggs cost last month versus this month. And if there was a price increase from last month to this month, then it means that inflation is increasing, and then that could mean a whole bunch of other things for the economy. And then you can see that there's core CPI, and then there's just CPI. So if you click on these little folders right here, it'll tell you exactly what all of those things mean. And of course, if it's confusing right now, it will make sense over time, but this is something that I definitely look at and I definitely read. And this is basically, it gives you the other names for this particular event. So also called food and energy or underlining CPI. So lots of information there. So I look at the core CPI, and then there's a year over year. So let's click on this. Here's some information about it, but it also tells you that it's released monthly. So it's kind of the same thing as I talked about before. They look at the price from, a period to another period, see what the difference is, and then that gives an indication of potential economic factors. So this is on this Wednesday, and then Thursday, there's core PPI. So PPI is also an economic indicator, although it varies slightly. So this is for producers. So basically, if it costs, let's just say in 1 month, it costs $5 to produce something, and then the next month, it costs them $6 to produce it, that is an increase. So that lets them and all the people who are collecting this data know that inflation is imminent. And if it costs the manufacturers more money to produce a good, then they're going to pass those costs on to consumers. So basically, throughout this whole economic engine, we're looking at these indicators to see how prices of things could be affected over time or period to period. And then also this could mean other things for the economy as well. So this is why this is another economic indicator. And if you want to know more about these different indicators, I do talk about this particular thing in pretty much a lot of my videos. And I will link the correct video in this video, just so that way you can have it. So unemployment claims is also a big thing that should be pretty obvious. This bond auction thing, I don't really look at that. This consumer sentiment, basically this is a study, I think, out of the University of Michigan. Let's see, yep, University of Michigan. Basically, it's a survey and they collect a bunch of data from consumers. And that's not really something that I really focus on. Yes, it's a red folder and I do look at the market, but I don't believe it has as great of an impact to the market as CPI or even PPI. So I would say CPI is probably the thing that I've seen the most impact. All right, so this is the fundamental side, totally important. And then next, we're gonna look at some technicals. So technical analysis is mostly what I do on this channel. And mostly every single week, I do this kind of chart with me video about different markets. So this one in particular, I just did this video. So if you haven't watched that, go back a couple of days from this particular video and go ahead and watch that. And you can see me break down this, including my trading plans for the week as well. So if we look at the technicals, this could give us clues as to where the price could go. So like I said, did a full breakdown here, but let's just recap it really quick. So basically what I'm looking for, since the market is generally in an uptrend, I'm looking for buys in this particular market. Obviously, we just don't know where the market could potentially go. So if we zoom in on some current price action, and then I have my little lines charting my path. So the first thing I may be looking for this week is I'm looking for price to break up above this little minor resistance here, retest, and then continue up here for a buy. And then I'm also looking for price to potentially come back down here and retest this level of 38,564-ish zone. I'm looking for it to consolidate a little bit and then continue up to potentially this level at 33,877 or even 39.50 or even higher at 39,325-ish zone. So that's kind of what I'm looking at for there. And then to the downside, since overall the market is in an uptrend, but we see very recently prices in a downtrend where basically it is creating this low, it created a lower high here, and then it created another low, a lower high here. It actually retested this major level right here. And then price broke down all the way down here. Now, I didn't get any of this move, mainly because by the time this move had happened, I was already out of the market and done for the day. So yeah, that's a major move. So price did bounce off of this level and now it's kind of in the zone. So going with the market, at least the market as we know it right now, generally in an uptrend, but on the short term, it is going in a downtrend. But if price breaks this really strong support level here at 38,500-ish 50 zone, then there's a high probability for price to continue to go down. It could break this support, form, some sort of support in here, retest this really strong level, and then continue all the way down to 37,777 kind of zone. So that's pretty much what I'm looking for this week. But as you can see, technicals are also very important when it comes to developing your strategy for US30. And these are all the things that I do for this market, any other market, every single week. Sometimes I reanalyze based on what had happened in the prior day, but you just have to be fluid with what's happening in the market. And that's pretty much it on the technical side. If you want to understand support and resistance more strongly, definitely watch these chart with me videos. And then I also have a video on this channel where I talk about support and resistance and how I map it out. And it's going into more depth about what you can do in order to draw your own support and resistance lines for whatever market you may be looking for. So let's go back really quick. So let's talk about times to trade. So this is going to be insanely important for you because it's not beneficial, at least in my experience. It hasn't been beneficial to just trade any old time. Like, for instance, if I'm getting off of work and, I was like, oh, let me hop on the chart. So let's see what's happening. Like, I don't do that. I used to do that at the beginning, but I don't do that anymore, mainly because I lost a ton of money trying to trade all the time. And if you're looking at a market like Bitcoin or Ethereum or one of those cryptocurrencies, those markets are open pretty much 24, or not pretty much, they are open 24/7. And although the index market and the Forex market right now is closed and will be opening up soon, at least from what we can see on our side, it's not really good to trade right when the market opens. Now, unless that's a part of your trading plan and you only trade during that session, then go ahead, because chances are, as you study that market over and over, then you will understand how that market moves. So that's why it's important to pick your time to trade. Only trade when there is volume inside of the market. I'll go back over to my chart and I use this sessions indicator. So there are a ton of them on TradingView. So go ahead and just go to indicators. And then I think I have it starred right here, sessions on a chart. So I think it's this one right here. So go ahead and find one that works for you, but let's go ahead and enable it. Taking a little time, that's kind of weird. Anyway, so if we zoom in on our recent price action that we just talked about, basically my trading plan, the way I have this set up is I have it set up so that way I can see the London session, which is this kind of light blue. And then we also have the New York session that I have highlighted, which is this green. And then when the London and the New York session overlaps, then it creates this kind of blue-green color. So these are the times when I'm looking at the market, because I get up relatively early. I'm starting to get up relatively early because what I've noticed just by back testing and doing some post-market analysis, that there is a time where there's a really clean volume inside of the market. So it requires me to get up a couple hours earlier. Obviously not 100% happy about that, but if I want to catch these moves, I need to be on the chart. So during these high volume times. So anyway, if we look at this, let's just go back a little bit. So I talked about this really big move right here. This started in the London, New York crossover time and then continued into New York. This really big move right here happened in New York. And then this day, there wasn't a whole lot happening, but we did see a little gap up here in the New York crossover section. And then we also see in the London and New York London crossover area, or at least times, that there was a lot of volume. So basically you want to look at the charts when there are really big candles. So let's describe what that is. So really big candles is, okay, this candle is definitely bigger than that candle. This is a really big candle. This is a relatively big candle. This is a big candle. And then these candles right here are kind of small, but then this purple candle right here, really big candle. So that's what I'm talking about when I say you want to look at areas inside of the market where you have these really big candles, because that means that there are a lot more players inside of the market, and then there's a higher probability for price to continue to move in your direction. So that's why you want to look at times of volume and just kind of give you a sense of when you should potentially be in the market. And obviously this depends upon your lifestyle, your schedule, and how much sleep you may or may not be willing to give up. So anyway, you just have to adjust your life a little bit, but it's not too bad. So really big candles here, and then there's a lot of tiny candles like consolidation here, but then once again, ginormous candles here. So based on this, or at least looking at the market in this way, this helped me determine, well, what is the best time for me? And like I said, for me now, it's getting up a couple hours earlier, but it also gives me time to do more analysis, and I still study the market and just kind of go back and seeing what's happening, back tests and all of that before work. So that is that in terms of times to trade. So based on your lifestyle, figure out which one of these times you actually want to trade. And then another thing I wanted to bring up, the thing that I love about this sessions indicator is the fact that it does have these inputs. So you could put in the time based on your location, and then you could have it either checked off so you can actually see it. I think I took those off. Oh, wait, no, there it is. It's yellow. You can actually see these different sessions on your chart. So this is really cool as well. So if you don't want to see it, the Asian session, it's not going to be in your chart because you removed it. So that's another thing I really like about this. Oh, so the market just opened right now. So next, so basically we talked about the times to trade, and basically we're looking for really big volume inside of the market. Next, we are going to talk about the entry signal. And one of my favorite signals is the bullish engulfing, bullish slash bearish engulfing, if I could spell, engulfing candle. This is going to be one of the simplest strategies for you to follow, especially if you're looking for ways to enter the market. So when it comes to using this strategy, it's not just, okay, let me find an engulfing candle and let me enter. So before we hop into that, let's go ahead and talk briefly about what an engulfing candle is. So let's just pretend we got some candle here, and this is one candle, and then we have another candle that is much bigger than this previous candle. So this candle is going to be an engulfing candle because the body of this candle is bigger than this candle. And then on the opposite side, if we were looking for sales, then delete this. Okay, if we were looking for sales, then we would have a candle here, and then the second candle would engulf or be bigger than this previous candle because it's obviously the body is bigger. So that's what I consider an engulfing candle. It's basically looking at the body and seeing which one is bigger. So really quickly, let's just go ahead and identify some of these bearish and bullish engulfing candles. So wait, before we do that, let's make this a little bit bigger and let's just kind of stick with recent price action. So one strategy or one way to look at this is to see this candle right here. This will be considered a bullish engulfing candle, mainly because if we look at the past candle, the body is much, much bigger. And when I'm considering engulfing candles, I'm really only looking at either a handful of candles around it, or I'm looking at the one candle that was before it. So in this case, if we focus on the one candle before it, obviously this candle is much bigger. If we look at kind of the general size of the other candles before this really big one, it's obvious that this one is an engulfing candle. And then on the downside, we see that we have this really big candle compared to the one right before it. It is engulfing it mainly because it broke and closed below the low of this candle. So the way I like to use this strategy is, let me type this out just so that way it makes sense. So when it comes to bullish engulfing a candle, it's just abbreviated here. Basically what I'm looking for is to take the trade at a support. And then for bearish, it's basically taking the trade at resistance. Okay, so when it comes to these candles, it's not just finding a random bullish or bearish engulfing a candle and then taking the trade. It's looking for these things at support and resistance. So support and resistance has been an ongoing theme inside of trading, and it continues to be true when you're actually looking for your signal candle. So if we go, let's just look at this particular area and see how we could have taken this trade. So we see this bullish engulfing candle above the support, and this could have been like, okay, let's go ahead and take the trade. So we're gonna take the trade, we're gonna buy it, and we're gonna set our stop loss. Typically I like to do it underneath the candle that I'm entering on. Sometimes it varies, and then this stop loss is kind of big. If you're looking to hold it, then it could be fine. Obviously we see that it didn't work out, but let's just use this for example purposes. So, and then target the next level. So I trade from zone to zone. So this is from support level to this resistance level. And, that could have been fine. So it's important to look at it from the standpoint of, is the bullish engulfing candle closing above support? Yes. Okay, then this is a potential opportunity. You can see that it played out temporarily, but since there was so much volume in the market, so I believe this candle was a news candle, and this candle was New York stock market opening, and then it basically reversed the move. So what I would recommend if you're going to use this strategy is not using it around news events. So this was, this was Thursday. I forgot which news event, but basically really big news catalyst. I would not even touch the market around news because this strategy will not work. It has the potential to, but there's just so much volatility and it's hard to gauge whether or not it's going to work out. So in this situation, this could have been a spot where the trade was taken, but it didn't work out fully because there was a lot of volatility in the market. So I typically like to wait about an hour or sometimes even the next day after a news event if I plan to not touch the market around news. So since this was news, let's go ahead and move to something that was a little bit more stable. Okay, so there was another piece that I wanted to add into this video on US30. Some days you're gonna have a lot of choppiness like it was today. You can see that I attempted this trade based on the trading plan from the Chart With Me video, and price did not work out the way that I had hoped. So fortunately on this position, I think I only risked somewhere around 0.25% and 0.5%, mainly because of the choppiness. So it didn't hurt my account at all. But let me go to an example that's really good that I also shared inside of my Discord group. So here is the Chart Competence Discord group. And you can see I'm sharing some other ideas in trades. Oh yeah, this is a really nice US30 trade as well. So let's talk about this one. So pretty much one of the strategies, actually I entered at a different position, but with the bearish or the bullish engulfing example inside of this particular chart, you can see that a bullish engulfing started right here. There's actually two. We'll go with this one first. So a bullish engulfing formed right here, and then you could have entered on this candle, or once it broke the high of this candle, and then just rode it all the way up to the next major resistance level right here, and that would have been nice. My stop loss was a little bit big because this was a swing trade, and I wanted to account for some different things. In reality, it could have been right here. Could have been a lot tighter with the higher RR, but this was still like 3 or something, at least 2.5. So that was a good trade. So another opportunity would have been right here. Once price broke above this level, you got this bullish candle, and then you have this other candle that is also a bullish engulfing. Once again, same strategy. You enter your trade on this candle right here that formed a bullish engulfing, put your stop loss kind of below these two candles, and then just let it take off, and that would have been awesome as well. So this is a really good strategy for US30. I think I have another one. Yeah, I do. So I also post chart ideas inside of this Discord as well. And this is pretty much once I took the trade, or I was looking to take the trade, I told people what I was looking for. So here's another example. This is, of course, from the Chart With Me videos. I'm literally giving you exactly what I plan to trade for that specific week. So basically, we have a bullish engulfing right here that formed. And as you can see, I took the trade around this area, and then I was targeting this high right here. Price eventually did. This was a live trade that I posted inside of the group. But basically, price eventually tapped into this area. Now, I think I got out somewhere in here just because I was satisfied with my profit. I'm like, let me just take my money and go and enjoy my day, because it did take a couple hours for it to fully get to this level. So these are just a few examples with US30. As you can see, I use this strategy quite a bit inside of the markets when I'm looking to take trades, and hopefully this is something that could help you with your own trading. So here's a good example right here. This would have been during a London session. This is a nice bullish engulfing candle. Could have taken this trade right here, and 30 minutes is a really nice time frame to enter. Put price below the wick, and then I would have targeted this next level right here. This would have been roughly a 2 risk to reward, and you can see that it took some hours to play out. So about 5.5 hours to play out, and that could have been a nice trade right there. So like I said, you want to do this in times where there's not a whole lot of volatility, so no news, and you want to do it when there's volume. So London, New York crossover, New York, that's going to work. One thing right here, so not this candle would have been a signal, because I'm like, okay, I need to wait for candles to, if I'm looking to take buys, I need to see bullish candles. So in this situation, I see a bullish candle. So let me mark this off right here. And it's right here, that's signal number one. Signal number two is that price is at support. So the thing about this strategy is that it's a really, really simple strategy. And you have to make sure that you're not trying to look for a trade every single day, because as you can see, there's not that many opportunities for this strategy to play out. But when it does work out, it's really nice. And then another thing about it is that I like to enter on the M30 time frame, sometimes the H1 time frame. So this may be a better strategy for higher time frames. At least that's been my experience. Now, if you play around with this, you may find that it may work for maybe scalping strategies. That could work if you're only focusing on that lower time frame. That could be really good as well. But typically, I like to use this on higher time frames just because I like to give my trades a little bit more time to play out. So that's, pretty much the strategy. It's doing it at support. So here is, actually that's a bearish engulfing, but we got this really strong candle right there. And eventually, if you were looking at this minor support right here, this is a little bullish engulfing candle, but this wouldn't have been a right time. At least I'm not up during this. This is actually during Asian session. So let's skip that. Let's find some high volume times. So this is actually a really nice candle right here during London session. You can see that it really pushed up. It came back down. I think that was a news event. I think I remember seeing that. But right here, here's a really nice bullish engulfing candle. And then that just took off. So that could have been really nice right there. So I like to look at major support and resistance levels, but throughout here's some minor levels. So this is the one that I talked about before. So right here, having your stop loss, maybe like below here, it would have been really close, but you still would have been in the trade. Let's make this bigger because it's hard for me to see now. All right, cool. And then let's find another support level. So the one that I just talked about a second ago. Okay, actually right here. Here's a nice little support level right there. This is a really strong bullish engulfing candle. If you would have held that, that would have been really nice. I probably would have got out right before the session closed. But right there. So basically you want to look at these at levels of support and not just take it, randomly. Like here, this isn't really an engulfing, but like this bullish candle right here, you have to also take the trend into consideration. So since this is, price consolidated and it started to go up, it would make sense to take this bullish engulfing trade because price is now trending up. And the same with here. But if it's going down and you see a bullish engulfing and you're trying to buy, then it's not going to work out because the trend is down. You need to take bullish engulfing trades at support and when the trend is bullish, and then take bearish engulfing trades at resistances when the trend is going down. Those are going to be the two key things when it comes to this strategy, and that's exactly what I look for in the market. So in this situation where it didn't work out, yes, there was news, but look, price broke down, it made a lower low. This was kind of like a retest type of trade. And this would have been a little tricky, to be honest, because you have all the volume from the news. So that's why I just like to skip it. But let's just say this wasn't news. This was just a fake out. This would have been a nice strategy right here on this candle. And maybe setting the stop loss somewhere above this. It would have been a little bit hard to gauge without going down to lower time frames. But right here, this could have been good. This would have been a crazy big stop loss. But as you can see, like price continued to just melt. Wow. Continue to go down. So from the downside. So that's pretty much the strategy from an entry standpoint. And then I did talk about, so the time frame, I did talk about that a little bit, but basically it depends on if you're scalping, swing trading, or day trading, or swing trading. Then you would just use the appropriate time frame. So for scalping, that entries are typically, at least for when I've done it, have been 5-minute time frame or the 15-minute time frame. Day trading is more 15, 30, 45 hour-ish time frame. And then swing trading is more higher time frame. So the hour, 4 hour, sometimes a daily. It just depends on how long you want to hold that particular trade. But just test this strategy out and see if it works or how it works for you. And then when it comes to stop loss, I typically like to place the stop loss below that particular candle. So for instance, I showed you on here, like, what was that example I just showed? But basically, here's a good example of a bullish engulfing. It's at a support. Price is generally in an uptrend. So if I was to place a stop loss here, So enter there, and then stop loss would go slightly below this candle. And then my initial target would be right here, because if I look left, then I see price rejected this level a couple of times, and I wouldn't want to target something way up here because price hasn't gone up there yet. I would only target something where price has already been. So, the planned risk to reward would have been almost a 2R, which is decent. So that's just kind of what I'm talking about when it comes to the type of trade you may be looking for. And this took, let's see, entry at 3 a.m. I'm not up, but some people are. Basically, this would have taken, wow, 6, 7, 8, 9, about 9, actually almost 10 hours to play out. So like 9-10 hours to play out. So that's an example of stop loss placement. And then I also cover the TP. So basically where I would be looking to exit. Basically the big idea with TPs or take profits is to not get greedy and to not, try to swing for the fences, so to speak. Make sure that it makes sense. So this would have been, up here, we didn't know anything about that, but right here would have been reasonable for this type of trade, especially since we're in an uptrend, we're at support, and we see that price closed here. And that would have been a really good trade right there. So hopefully this was helpful. If you have any other questions or comments, go ahead and put them in the description box below. And I'm having to make more videos like this in the future. See you soon.